And here we are making high after high, and you can hear a pin drop before you'll hear somebody in the regular financial networks talking about gold.
This is Kaiser Johnson with Liberty in Finance, and these are the Miles Franklin Weekly Specials for February 3rd through February 10th, 2025 while supplies last. This week we feature pre-33 AU $20 gold St. Gaudens coins at just $50 over melt per coin. We also have backdated silver Austrian Philharmonics at just $2.85 over spot. Backdated Canadian 1-ounce gold maples are just $59 over spot. And pre-65 junk silver dimes and quarters are at the lowest price in years at just $1.49 over spot. Pre-65 junk half dollars are just $1.69 over spot. And 1 10th-ounce Gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Peter Grandich from Peter Grandich & Company. Peter, thank you so much for joining us today.
Absolutely, always a pleasure to speak to you, Elijah.
Well, it's great to have you today, especially it seems like every time we have you on, gold's hitting a new all-time high. A few years back, you said, you were selling stocks and buying into gold. It seems like that was a very good call on your part. Your take on what we're seeing right now, it seems like there was a lot of bearish sentiment after Trump won in the gold market. Gold sold off, but now again we're at all-time highs. Getting closer to 2,900 and that $3,000 mark.
Yeah, so you're right. Back at the end of 2021, I made a decision for myself and didn't think really much of our clientele and our planning group should do the same, but consider it partly. And that was that I actually thought through the end of 2024, gold would actually outperform both stocks and bonds. Some people bought the stocks part. They just couldn't imagine how could it beat bonds. Bonds are always the safe investment. Well, bonds up having they're in the third year losses at this point in time. And when we began this year, I even said I still believing that 3,000 was coming, but I thought, the first few months may be a little quiet in gold, but that changed. And it changed a lot because of Trump. So as much as you say that it was a short period, a few days of profit taking, some of the actions of Trump have led to the two things that that I've spoken about these last few years, which are the two single most bullish factors for gold. One, central banks are acquiring it like there's no tomorrow. And I believe because they recognize a day of reckoning will come, partly because of what's happening with BRICS and the fact that one day with all this debt in the world, there's going to have to be some sort of restructuring, and that gold proved to be worthy for something like that for a couple thousand years. And they weren't buying into the crypto nuts that somehow it's a real relic and crypto is going to save the day. So central banks have been extremely aggressive buyers. But the other part that you and I spoke about, which is now playing out, is I mentioned to you several times how the movement of physical trading from London and New York, which some of us like to call the CRIMEX, not the COMEX, and to Asia was going to seriously impair the paper hangers who tend to play the short side aggressively in the paper market in gold out of London and New York. And when we did have those one day down $30, $35, I would get online and tell everybody, listen, it doesn't last like it used to. Probably as early as tomorrow or no more than a few days from now, we'll be back above wherever they sold it from. And that's what's happened. And now the tariff situation, where really concerns of potentially making deliveries came into effect, it was the 1-2 punch. And it really radically changed now this game. Because irregardless of how they try to fix it or whatever, the old games are gone. They're not going to be able to play it in that way anymore. And I think a real physical market will dominate over the paper market. And that's nothing that we've seen for the 40 years that I've been in this business, but that is a huge change that's occurring. So those are the two things. Now, as you and I speak here on this Friday before the Super Bowl weekend, we are overextended. And we could still rally right to 3,000. But if you're someone that's looking for a much higher number, it would actually better now that if it just takes a little breather, corrects a little, 2 to 5% type corrections, are okay in this type of bull run. And 3,000 is just a round number. It's not a number that should offer, some special type of resistance, but it'd be better that we go through it when we're not as deeply overbought as we are now.
You mentioned how the tariff situation really kind of is a curveball here. What kind of impact do you think the tariffs will have on, can you expand on that, kind of how, importing and exporting gold?
I don't know. I'm not that sophisticated. The gentleman that owns Miles Franklin Andy Scheckman is a far more authority to speak on that regard and other factors. I love Andy's work. But the bottom line is, what it's done is it's thrown the people who've always profited from the short side and basically had the game stacked to their side is no longer the case anymore. And you're going to think twice now if you're still one of those people, if you're still surviving. And we don't know to the extent of how dramatic the deliveries could be, because one thing I can tell you, if we don't stop here and we just pick up Monday where we left off here on Friday, those people have a real problem. I mean, these are the type of things that people spoke. Now, a lot of people talked about that in the silver market, but the reason silver, and people hate it when I say it's like kissing your sister, but it still remains that because it doesn't have that central bank demand, that excess that can just keep taking out. And here's the interesting thing. The U.S. gold funds, if you want to call it the GLDs, the paper holders of so-called physical bullion, they're still net sellers of bullion. They're still liquidating. And it's dramatic that it doesn't surprise me. What my feeling is that the financial service industry in the U.S. treats gold like kryptonite. And one of the main reasons they do is they can't churn it, burn it, and make a lot of money in a lot of different ways. And it also flies in the face where they do make a lot of money, and that's in stocks and bonds. And here we are making high after high, and you can hear a pin drop before you'll hear somebody in the regular financial networks talking about gold.
Now, it seems to me, as you mentioned, how gold has really stolen the show, right? It's really gotten a lot of the attention where silver has not, but silver has also done very well over the last year. And, if you look at, I was just talking to Michael Oliver and he was saying actually silver has slightly outperformed gold in the last 12 months. And a lot of people find that surprising. So moving forward here, if we do break past the $3,000 mark in gold in the next month or two, what do you anticipate for silver this year?
I've never been a silver bug. I like it. I think you should own it along with gold. And I think he's very close, and he might be a little bit dependent on exactly whether you're 11 months or 13 months. But it's still a thing that's trapped under $35. It's still a market that continues to run in that resistance. Now, the good news if you're a silver bug, and there's guys that have been saying that it was going to go to the moon for the last 30 or 40 years. And I guess like a broken clock, they'll eventually be right. But the fact that it's taken so many times up there and not, when it finally breaks, it's just going to break and run like that tomorrow. My argument would be, if I still have my money management hat on, Elijah, is, hey, at $35.50 or $36, have all the open buy orders you can have, because you'll pay a little bit more than here, but the run then is going to be far more likely than trying to guess this is the time it finally goes through. Like I said, I own it, but I've always owned 2 to 3, sometimes 4 times more gold than I did silver, and I don't see any reason for myself to change that approach. Okay, now I can get all the silver bugs, send them emails. Okay, thank you.
No, that's fantastic. And it's good to have, a different opinion, because obviously people can be very bullish on silver, but, we need to hear, balanced approaches, which you give, I think that's really good. And I did want to then ask you about gold here. You mentioned how it should probably have a bit of a pullback or a breather here. How long do you see that lasting before we move higher?
Gold shouldn't do anything. I'm just saying it would be actually better if you had a long-term perspective, because what happens is the more a market gets overextended, or in a sense looks like a little like a bottle rocket and all, when the fire goes out, it doesn't have anything to fall back on, and it falls sharply. And it creates disenchantment because of the volatility. I'm not saying it's goner, although we came off a little bit here Friday going into the weekend. I suspect that we've seen them already raise margin. That didn't really work this week. I don't know what much left they can have, except that if it's as bad as some people written about over the years, government controls would have to be instituted. And, Great Britain would have to look at that in terms of London and so forth. But the good news in all of this is that what it's performed for a couple of thousand years, it has done it yet again. Do you know, when you tell people this, and Elijah, don't be offended by your youth when I say this you're hearing this from an old man, but almost half the financial service industry in America now wasn't even born when I started. And probably well over a third, or maybe up to somewhere between a third and a half of all financial advisors only started in the business after the new millennium started. But if you go to most people and say, hey, since the new millennium started for the last 25 years, what's been the best performing? Oh, stocks, they've been killing it. Maybe bonds. You hear the average person say gold. Gold has outperformed both stocks and bonds from January 1st, 2000 till now. And yet ownership of it, yes, people that are watching your show are the small minority that do it. But you and I go into any financial service firm, any hedge fund group and all, and look at any 100 accounts in any part of the country, and maybe 2 or 3 have some exposure to gold, especially physical gold. The rest are loaded with stocks and bonds.
Now, as for the miners, I know you follow those very closely, and the narrative has been that they really haven't performed as well as the gold price. Do you see that changing anytime soon, especially if we get above this 3,000 mark?
Well, it's happening now on the majors. The GDX is almost up 20% just in 5 weeks of trading in the new year. And the reason that is these major gold producers, the majors now, not little small explorations hoping to find something on a wing and a prayer, but legitimate major producers that are producing hundreds of thousands of ounces a year, if not 1 million ounces or more. They're cash machines now. Their free cash flow is at records. And we were just 2,600 and something a couple of weeks ago. So another 200 and something to the bottom line. Their operating costs didn't increase same percentage-wise during that time. Their fourth quarter numbers are going to be great. But their first and second quarter numbers here, being able to, even if they started selling gold forward here at near almost 3,000, they're going to be cash machines. And that's what's going to lead them to build their business for the future by going out and buying deposits and potential companies that have good potential into the lower end, or what I like to say where I'm invested heavily in the junior market. That was the last missing ingredient to finally get the junior resource market going. That and the fact that cryptocurrencies still are a big negative to that end of the market, because people would rather speculate on some meme coin with a name fought in it than a prospective junior company that may actually find gold, silver, or copper. And as that changes or lessens, that'll be beneficial for the junior market as well.
I think cryptocurrencies have also kind of stolen, gold has gotten a bit of attention, but cryptocurrencies have gotten quite a bit of attention, especially since the election of Trump, because he's seemingly, very pro cryptocurrencies. His Trump coin, is making him, expanding his wealth on paper by multiples there, which is kind of funny. But your perspective on this going forward, do cryptocurrencies, are they still seen as, an alternative gold-like investment, or is there a shift coming, do you think?
Well, first of all, let's talk about those 2 coins, his and his wife's. They're down substantially from where they opened. So unless you were one of the original buyers, which I would suggest was just very close-knit people, it wasn't the public at large, a lot of people have losses. Also, imagine me recommending something from 60 Minutes, but 60 Minutes actually had a good segment a couple Sundays ago, and I keep having and putting it up on my X page about how much money the cryptocurrency industry spent getting people elected in this last election. the Senator Loomis, she's bought and paid for. I watch her. It's like watching the old Godfather movie where they bought that senator in Nevada. She's just might as well just wear a sign that says buy crypto. So there's an influence clearly from there, but there's large sums of money being lost. I'll give you an example. I don't want to name the person because I liked the guy, but I was disappointed when he made this decision. He was someone that talked about silver every day, had a YouTube channel. I think he had 50,000 or more subscribers to it. Loved it. You can see it was personal. It wasn't just about making money. And then in December, he sends a notice that he's no longer doing that. He's brought out his own mem coin. And first of all, I thought it kind of offended those people that were coming to him, listening to silver every day. And then overnight, you're introducing a mem coin of your own coin. And it's been a rah-rah. And it had a brief run, and now it's down substantially. And those are the type of things that happen at the latter stage of a move, not earlier in the middle. I am certain that people who were maybe boats in those canals or had little stores in the Dutch, eventually towards the end, all became tulip experts. But these are the type of things that happen in the latter part of the move. And like I said, I watch and I put in Google, see how many times the word gold or silver versus crypto, whatever. It's still night and day. And it's when you've seen them go, when you see the juniors are going, and people that knew that told you that they were hot on crypto now are telling you about junior mining stocks. Then we're going to have to think about getting out there as well. But we're so far away from that right now. I don't have any concerns about that.
It is a strange market right now. The signs that we're seeing, for example, on the retail side, where prices are at all-time highs, but premiums are way down, which is signifying, not much demand from the mainstream public, but prices are so high. So what's causing this to happen? It seems to be, just looking at this myself, I don't have any, inside information except some experience on the retail side, that it's the mainstream that is ignoring gold and silver, maybe even buying a little bit less of it, selling some back. And it might be the insiders and the big players, the central banks, that are buying. So this seems to be a big sign of kind of what's happening and what could be in the future. It's not like the mainstream is buying in right now. It's not the signals. We're not seeing the signals right now of some sort of mania or bubble.
Well, I'm very happy what you said now, not because it means you making less money as a dealer, but if we are to get to 3,000 and go above it, one of the issues earlier on in this move was the premiums were so high that to buy physical bullion, people were not buying it because by the time if they bought it and sold it, they almost had to have the gold price double, which was just not incentive to buy that. So I'm happy that you're telling me that premiums are dropping, because they're dropping at the right time. So when the crowd does show up, what doesn't turn them off is, oh my God, I got to pay 40% above spot to buy a coin, 50% above spot. That was always the problem with rare coins, that you had just such a high markup going in and going out. It kept it from ever coming, I think, a worthy marketplace. So I'm glad to hear that. Listen, the good news of what I've always said about the central banks buying, they're not buying it for a trade. Who are they going to end up trading this all to? I mean, they're buying it because it's going to be used for something more than just, hey, look, our thing is going up. Now, you're going to hear this talk. This is how the crypto market, the negative about the crypto market, they have the world's greatest stake oil salesman that ever worked on the earth as their lead spokesperson. I'll say it. I don't care what he says or reads this or hears it. This guy, Saylor, could truly sell snow to the Eskimos. And the next thing that they're going to push, because they've tried a lot of things. Remember a few years ago, crypto's going to replace money usage. Everybody's going to go anywhere. The technology never allowed that from day one and all. Now, there's other coins that I think will work, but I don't think Bitcoin will be the answer. Then now the latest, or the fifth birth of the greatest thing for why you got to own it, is a reserve currency. And it's going to need to replace gold. And one of the pitches they're going to make is, hey, look how much gold has gone up now. The United States will just sell their gold now and own Bitcoin. Okay, let's just say they did that. Okay, then so after they're done and they own Bitcoin, what's left to keep Bitcoin going up? There's no intrinsic value to it. There's nothing else you could use it for. You can argue gold is used industrial-wise, so forth, especially silver and all. So I suspect that that'll be their next ploy. And we heard it. Remember, you were in the business. It was just a few years ago when they said Bitcoin's the new gold, or digital gold, they like to still call it and all. So what's happened? Gold's gone from under 2,000, almost up 50% since then. And it's doing that for reasons past. You know, Poland isn't a world-renowned central banker, but it was interesting that they came out and made a public statement that they will never, ever have Bitcoin as a reserve currency. El Salvador, which just remember a year or so ago, that was the big selling point of the Bitcoin people. Oh, look at this, the country's there. That's what America needs to do. Well, they got rid of it. Basically, had to get rid of it because the world, people with the money, the IMF and all said, if you do that, we can't help you. So it doesn't mean it's going to end tomorrow. And I'm a big believer in some of the other cryptocurrencies surviving and prospering after we had this inevitable sharp correction. But Bitcoin is not going to be the one. And it's just that this person and a few others who paid a lot of money to certain people to speak and talk about it and all have planted these thoughts in people's minds, but there's no substance behind it. And gold, the relic, and every other name that you've heard it called in these last few years has defied their expertise.
No, we still see, it seems like, a lot of strength in the stock market. Do you anticipate that changing anytime soon?
Well, I said before Thanksgiving, we go back, what we talked about is that they were going to run the stock market through his, I was calling it coronation, through his inauguration, and could last for a few weeks after that. This is the one thing I'll say about Trump. In this household, the wife is the Trumpster. I'm not against the man. I voted for the man. But I don't live and breathe every word he does like my wife does. But I'll tell you one thing you can say about Trump, which is undeniable, which I cannot remember saying about any other politician since I'm a young man. He does what he says he's going to do. You might not like it, and there's clearly people pretty pissed at him, but look at all the things he's done. He's done more in 3 weeks that he's been president than I think the entire previous administration can point to and say things that they went in and tried to change and do better and all. And this finding of how money was being really spent is a death blow to the Democrats. That's why they really stand. They cannot let this get to the core. If they get to the core and start identifying certain people that actually got the monies and so forth and so on, Democratic Party's over as you know it. They'll have to be a formation of another party and all. And that's why they're, as even today, as we're talking, showing up at these places in total panic. So that's an unknown factor, and that can impact the market. So the stock market is still rather narrow. It still has enough strength to go on, but we had an interesting employment number today. I think we should talk about this, Elijah. We had a big pickup in wage inflation. We had a slowdown in the actual employment. It showed, which I'm not the only one that was talking about it last year, that it was fudged, the employment numbers. So we have a weakening employment picture, wages going up. That's something we haven't used a word in a long time, since the 70s, stagflation, where economy slows, but inflation stays constant. And that's something to really watch, because if that's backed up the following month again, which will be on Trump's watch, then the stock market may have a serious air pocket. But I still think it has, still it can stay up relatively high for the foreseeable future. But if you ask me many months out, or if there's anybody still invests for more than a year, it's priced to perfection and vulnerable to serious, sharp declines. And me personally, I'd be out of the market and sitting my hands before I'd be fully invested, or very much invested.
In a stagflationary environment, even if the stock market just goes sideways, you're losing, right? Because inflation is eating away at the real value of the stocks.
So we're going to go all over the place, but let me get this out because this is critical. There's three issues to me that not even Trump can do really anything about. One is the debt issue. In fact, I think he's going to add to it. And I understand his mentality around debt. He's always been a big believer in debt for leverage and hopefully to build things. Two is the retirement and aging crisis. It's getting worse and not better. 2/3 of Americans are working paycheck to paycheck. They have little or no savings. They're not going to be able to live these beautiful ads that the brokerage firms love to run, that you come to us and then you last 20, 25% of your life, you live happily ever after. As they get older, it's going to be much more difficult to do things and work, and only they're going to turn to a government to help them more and more. And then the one that I talked about a year or two ago that no one listened to until we unfortunately had these terrible situation in Los Angeles, and that is that I've talked about the crumbling infrastructure and the higher cost of natural disasters like we've seen in the Carolinas, like we've seen in Los Angeles, and we're going to see more of them at a time when this country can ill afford to spend more money. And so those are the three things that I think eventually weigh down any of the positive things that come out of what Trump and his group may do for the economy. And so if you're very long-term oriented, you're investing over for the next several years, or you're banking on retirement 5 or 10 years from now, there's some real concerns. And that's why I always go back to the simplest things that we say in our planning group. Less is more. Spend less than you make, and try to recognize that there are necessities and luxuries, and don't confuse the both of them.
When it comes to, eliminating some of these really stupid and evil things from what the government has been paying for, at the end of the day, it's not going to make a consequential difference in, how much money the government is spending. A lot of the big ticket items really can't be eliminated. So I think to your point, I don't see the U.S. national debt situation or inflation really getting under control in the next 4 years.
Deficits may shrink, because instead of spending $3 trillion more a year, they might only have to spend $1 trillion more because they find these $2 trillion that were going out the door the wrong way. But so much money is going to be needed to take care of the things that we spoke about: a crumbling infrastructure, a retirement crisis, an aging crisis, and servicing our debt. Listen, 27 states have financial crisis, and they don't have a printing press. And they're not balancing their budgets, and they're all going to look for Uncle Sam for the help and all. So, yes, it's good to see these things happening, especially when people were truly ripping us off big time. To see all these payments that were going to the media, and then the media was making these reports only because they're being paid off. Those were the worst visions we had of banana republics. And here we were, the biggest banana of all. But I still think that at the end of the day, the stock market, will underperform. Here's the big point. It may not crash. I know there's people talking about crashes. I'm not in that camp at all. But even if it just goes flat, Goldman Sachs is even coming out and saying now that the stock market for the next 10 years is going to underperform. The problem with that is, and I can tell you that firsthand from our planning group, we still meet 7 or 8 out of 10 families at all levels of income who are living and spending more than they're making. And part of the reason is because they've gotten used to above average returns in the market. And so if the market doesn't go down a lot and they lose a lot of principal, if they don't make excess that they can keep living off, then they're going to have an issue. And also, it's not going to be how much you make in the future. It's how much you don't lose, which is going to make the difference of whether you're a winner or a loser.
And if people are interested in learning more about your planning group, where can they find you? And one of the things I always like to touch on is faith as well. I love how you really bring faith into the mix with finances as well. So can you tell us a bit about that and where they can find your planning group?
Well, the planning group, you can learn more about it through my website, petergrandich.com. I will just tell you today, as I put up in the X post, and I get a couple nasty messages, but, I went to Adoration today for lunch. I have some issues personally with my health. I've gone through a crazy period with a large ownership in a company. And instead of running to a bar or to some place, I don't know where others may go, I stood before God in adoration and in front of the sacrament and find peace and healing there. And it's not something that's often spoken about in this business. In fact, you're like this, Elijah. I don't know if I ever got a chance to tell you this. I know it's been in the book and all, but when I actually first decided to put my faith into my business and I went to the firm I was working for and told the head cheese what I wanted to do, his line, and I can almost remember verbatim, was, I don't care if you put a rock on the door, a bull on the door, or a bear on the door, but you're not putting God's picture on the door. And so tying finance and biblical teachings and all, there's a couple little maybe firms that do that, maybe individuals that do that, but at the mainstream financial service firms, it's not a place. God isn't apparently seen in those operations. And so for me, it's been really a matter of life and death, especially the last half of my 40-year career. And so no matter how long period I have to go, I'll never be ashamed of it. And for me, and the teachings that come out of both the church and biblical teachings, listen, you can call that book, we'll finish with this, you can call the Holy Bible just a useless book that was made up by a bunch of people, the Word of God, or somewhere in between. But it's had more of an impact on anybody else. And the most amazing thing about it is there's more top verses in that book about matters of finance than there are even about what you think of the two most important topics, heaven and hell. So whoever put that book together was fairly smart, and it'd be worth to look at to see what they have, because, and in it, they don't have one positive word about the thing that's caused America a lot of problems, and that's debt. It's a very bad four-letter word in Scripture, the word debt.
Fantastic. Well, we really appreciate you sharing that, as always, and all the insights you bring to our viewers. If our viewers are interested in learning more, petergrandich.com is the place to go. We'll put that in the description of this video. Any last thoughts before I let you go, Peter?
Well, praise God that you give me this opportunity to share that. It's not often that I get it. It's one of the several reasons why I'm glad to be able to speak to you, Elijah.
Appreciate your time as always, Peter. Exciting times in the markets. We'll definitely keep updated with you. Thank you so much, Peter.
God bless you, my friend.
You too.
This is Kaiser Johnson with Liberty in Finance, and these are the Miles Franklin Weekly Specials for February 3rd through February 10th, 2025, while supplies last. This week we featured pre-33 AU $20 gold St. Gaudens coins at just $50 over melt per coin. We also have backdated silver Austrian Philharmonics at just $2.85 over spot. Backdated Canadian 1-ounce gold maples are just $59 over spot. And pre-65 junk silver dimes and quarters are at the lowest price in years at just $1.49 over spot. Pre-65 junk half dollars are just $1.69 over spot. And 1 10th-ounce Gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.